Hello guys, welcome to Traders Therapy session. In today's session, we are going to break down gold. And by the way, today is the 26th, is Saturday, 26th of June. Let's see what will the market give us for the coming week and the coming month. Our breakdown will start from weekly time frame, going to daily time frame. No, I mean to say we'll start from a monthly time frame, going to weekly time frame and daily time frame. Will end at 4-hour time frame. That will be the analysis, meaning for the overall move, for the big move, looking at the bigger picture. Then once we start to go to H1, M30 and M15, those will be the entry charts where we might enter, where we will look for entry triggers. So without wasting any time, let's start. Looking at the monthly time frame, we'll focus at our focus will be where the price is at the moment. So the last month, which will be May, price attempt to make did not attempt, by the way. Price went up. Looking at the overall picture, we had a impulse pullback. Then at this point, we are not certain that this move, this point right here, is our new point for the next impulse leg. So what we have, let me just show this graphically. What we had this move right here, and we had a pullback here. We had a pullback, and price attempted to go up, but came back down somewhere around here. This is that area. Then price went back to this point, and now the price is kind of pulling back. Is doing something like this. This is exactly what I meant when I say we are not sure whether here at this point, let me just highlight. We are not sure whether this point, which is this point right here, it's our new impulse initial point for price to go up, just like this. Or maybe the price might pull further back and give us the new impulse, or might break this low right here, the one that we have, and retrace and give us, or the market go down. We don't know that yet. So what we know at this point is that we had a push, pull back, attempt to push, pulled back, and at this point, as far as the market weight came from, this is considered, okay, let me remove this one. This is considered, even if it can break here, even if price can break this whole move is still considered as a pullback until at some point it breaks this low right here and retest and going back. Then we can say this is the break of structure. But at this point where we are now, okay, let me move that one. Where we are at the moment, what we can see or anticipate is that we have the following here. We have price pulling back, and we are searching for an opportunity to go into the market. Without wasting any time, let us look at the current price. What did price do? Okay. Price tried to pull back and broke this low right here, because this was the candle that broke the low, and then the new candle opened below and closed below. Then after, we have another candle which attempted, went to the break, created a resistance. We had a resistance at this point, and the new candle. And this candle alone, let's focus on this candle. Remember, we are on a monthly time frame. Focusing on this candle, it shows that at this point, the bears had no power to push the price down. The volume was up. Why? Because we didn't have a bottom wick at this point. So the price pushed up and pulled back just to give us an opportunity to fill the wick. Then it pushed and broke at this point right here. Looking at that, let us continue. What we had here, we had price. This was an opportunity. In fact, this was a signal. After the break of this level, this was a signal to buy, but based off monthly time frame. So we had this bullish candle at this point, breaking this candle and closing bullish. The next month, which is the month of June, where we are at this point, what is happening? The candle opened. We don't know yet based off monthly time frame. We don't know how it started. Only the lower time frame will tell us that the price either went up and came back down, or went down and came back up, whatever that happened. But what we can tell here is that, look at this candle right here. Let us try and look at this candle. Okay. The candle broke above. The candle broke above and left the shadow here. After, the candle broke below and left the shadow. And what happened? Then it closed. Oh, it's not closed yet, because we are on the 26th. The candles still have days to do whatever it will do, which we don't know at the moment. So, according to the monthly time frame, we have broke above and below, but the market is still consolidating. I can say that at this point. Unlike here the market was trending up, but at this point the market is still consolidating. This is what we have on a monthly time frame. Okay, let me remove the drawings and see our significant area. We can say we have a support, we have a resistance at this point. We can mark our resistance, and we have a support that is not yet created. Okay, let's mark this one. Then we have a support, but the price is still playing. Is the reason why I cannot identify this area as a support yet. We'll wait and see what will market do coming on the coming days. This is what we have on a monthly time frame. But looking at the monthly time frame, if you know structure, if you know your trends, you can tell that the price rallied down and attempted to break the structure at this point. Okay? Only the lower time frame will tell us what we have here. The only note that we can make at this point, so that we don't forget what we are talking about, we said the price, not rise, come on. Here we said the price did what? The price broke above. What is happening here? We said the price broke above and went back. This is the only information that we are having. Price broke above and went back. Let us just copy this, because this is exactly what happened even at this point right here. Then the price broke below. At this point, the price broke below and went back again. This is the only thing that we have, but you can make a slight note again so that you don't become confused of your analysis. Based off this area right here, we had, come on, what is happening here? My batteries are dying. We had a pullback. Let's say we had a pullback and attempt to break or attempt to break. Okay, let's say we have a pullback. I don't know how to phrase this. Oh, we had a pullback. Okay, let me just say break. We had a pullback and price attempt to price attempt. What am I doing here? And price attempt to break structure. Price attempt to break structure. Sorry for taking time here. So here we had a pullback. This is pullback and price attempt to break this high. But here's the note. This could be a double top. Right? This could be double top for price to go down. But this is all we have on a monthly time frame. We have a price on 1907, 1905, around there. 1910. Then the price also broke here. This is the only valid support that we have at this point. Bearish, bullish. And this is the valid, okay, the recent, I'm saying this is a resistance because of one thing. The price now, looking at the momentum, the price is far to come here. And I'm not saying that this candle cannot retrace back and become the bullish candle. I'm not saying that. We don't know what might happen in the coming 4 days before this candle closes. So let's go to daily and see what happens. Going to daily, please let us familiarize ourselves with price. We have this move. Remember, this is month 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months. That pullback. This is that pullback that we had there on a weekly. We have this pullback at this point. And remember, we talked about price pulling back. Let me try to draw a trend line here. So we have a trend line. Please, I know some people are drawing trend line based off the weeks. Some people are drawing trend line based off candle close. But the most important thing is that as long as your trend line doesn't break through price, then it's okay. So we have our point A, point B, and point C where we're supposed to take sell. Then we have break attempt. The price broke. At this point, there's something that is interesting. Those of you who are trading trend lines, this right here, you should be very, very much alert when price does this. Because at this point, we are just waiting for a signal to buy or break in. Because this is a clear break based off weekly. This is a clear break of trend line. So let us look at the structure at this point. The price went down, came back up, went down, came back up, went down, came back up, went down. The price was creating the lower highs, was creating lower highs and lower lows until such time that the price, let's see if it broke, if we take this note, until such time the price attempt to react at our last lower high point, which this is the point where price created our double top, the one I meant at this point. This is that double top we were talking about, okay? Oh, sorry. This is that double top we were talking about, saying that this might be a double top creation formation. So those who are looking at price action patterns would see this maybe as an attempt to double top. And also, those who are trading trend lines will see this as a trend line break. At this point, I'm talking confluence. Many things telling us one thing at the same point. Here we are talking confluence here. We have many things that will tell us that the price will go up at this point. Okay? Oh, by the way, that was a double top. Double top didn't say anything, but at this point, we have a trend line break, by the way. Then after trend line break, then retest. We have a retest at this point. Again, I was looking at structure. Sorry to mention confluence prematurely, because at this point, this is where I saw it, by the way. I'm seeing a structure being violated at this point, because here's the price pulling down, pulling up, or you can either maybe argue and say, let's do this. You can argue and say this is one push, then this is pullback, this is another push, then this is pullback, this is another push, this is pullback. What do we have here? We have price pushing, pulling back, creating lower highs, lower lows, but at this point, price attempted to break the last known lower high. Then it found a strong resistance at this point, then price rallied down. But it went down for a reason. Let me remove these lines. It had to pull back for a reason. If you were trading the breakout, your trading strategy was based off the breakout, you have no reason at this point to go out of the trade, because let's say you bought based off this engulfing candle, then you were in profit, then now you are back where you started. You are in a loss. At this point, there's no way, there's nothing that tells you to go out of the market unless this comes back inside this trend line. Okay? Some people might see a falling wedge. Those of you who are trading price action pattern. Okay. Let's try to see. Some of you might see a falling wedge, point A, point B. Some of you might see a channel or a falling wedge. But what we see now is that the structure attempted to break and came back. But it came back for a reason, because it found this, it's retesting this trend line break. Then this is what we have at this point. Let's make our notes. At this point, we have trend line, break and retest. At this point, we have trend line, break and retest. Just waiting for a clear signal for us to buy. But this is a retest, by the way. This is all we have. Let's see if our analysis correlates. This is what we have here. And that retest might be this shadow right here. Then trend line, break and retest at this point daily. And if price do come back in, it might come to this area right here. Okay, here. It might come back to this area right here. It might come back to this area, try to fake you again out, to fake us out again, and break and go to its desired direction. This is what we have at this point. Let us go to H4. And by the way, we said here we are waiting for just for reaction. And I saw something in H4. In H4, we want a reaction. What kind of a reaction are we looking for? We are looking for something like this at this point. Something like this and the candle to break. Or better always something like this. As people bought here based off this candle, we want something like this. Maybe this first candle, the second candle. Maybe if the second candle breaks above this, breaks and close above this, that will also be a good way to enter the trade. So we are looking for reaction. I saw something here. Going to H4 to daily, I mean to say this was a weekly, sorry. Going to daily, let's see what we have based off daily. We have a upward move, then the pullback. We don't know whether this was a strong pullback. We don't know whether this move right here will go further down to this point. And I hope this level, what it is, this level 1684, I really hope 1684 is here. Yes, around this point. So we were still correct to anticipate that the price, if the price comes back in, it will do what? It will come and retest this support right here. So based off daily, we have the reaction that we were looking for, but the price went down and found support at this point, right? At the moment, what do we have? Okay, here's another area of confluence. This was resistance. It was support rejected. This area was rejected and the support. So at this point, price came in and found support at this point and is busy reacting. So we are waiting. And one other thing that is important, that is giving us confidence that the price, if the price that gives us confidence to buy, if the price gives us the signal to go up, is that we have a clean traffic here. The price can push up and up to this point, maybe start to react wherever it gets the reaction. So let's analyze the daily right here. Based off the daily, price went down and found maybe let's say a new support here at this point. Those of you who are also trading structure, you might see a minor bullish flag here. But we are not going to focus on that. We are only going to focus on chart and price. I hope I said that right. Then we found first support was here. Second reaction, we found second reaction here. Remember, this is the daily. Second reaction. And the best way to find our buys will be above, I would say above this. But I'm seeing something. Above this, we have certain rejections. I might be enter the move, maybe if candles attempt to come here, but I have rejection. And this rejection corresponds to this resistance right here at this point. So to be safe, I will do what? To be safe for my long-term move, I will wait for price to break above, close above, at least maybe to have a strong candle that will close above this resistance right here. That will be a clear signal for me to take buys. But remember, this video is for day traders and scalpers. So we are not going to wait for candles to come and close above this. We might have 5 candles again that will react at this point, just like this right here. This doesn't mean that we don't have trades. So based off daily, let's wait. Oh, my battery, come on. Let's wait for price. Let's wait for price just to break consolidation. Let's wait for price. I meant price here. Let's wait for price to break consolidation at this point. Then we can have it clear. Either we can buy or sell, but our sales won't be that much worth it. But based off this candle, we can sell unless the price breaks below this area. Then we can have maybe a more clear sell. We can say that this sells after the break of this will be more clearer than what we have at this point. Then based off this is the only thing that we can talk about here. Waiting for price to give us the signal to go up. Then let's go to H4. Okay, I saw something here based off H4. On H4 time frame, I saw symmetrical. Let me just remove this right here because I was watching this based off H4 before during the week. Okay, let's remove this. Let's see what we have here. Remember, this consolidation that we are waiting for its break is this consolidation right here. So let's see what we have. At this point, we had a minor pullback for this downtrend move, and price continued down, pulled back again, broke. Okay, this was not a break. Is the reason why I had a symmetrical triangle there, and I will explain this shortly. Then we had a pullback, then we had impulse, then the price came back in and do whatever it's doing right here. Okay, let's talk about this. Price, this is what happened right here. Let us not be faked out. The price came down, pulled back at this point, went down, pulled back, maybe here. I'm referring to this point right here. Came down here at this point. This didn't go down. Came here at this point, then price went back in and started to doing whatever it's doing at this point. Let me explain this because this is very important at this point. This is not break of structure or something or low. We might call it a low, but this is just a fake out. Because why is it a fake out? The last known support is this one right here. Then what happened is that the price broke and closed below, but did not open and close below to call this a break. This is just a fake out. These two candles are just a fake out. Because if you can go to maybe a daily time frame, we might see just a week right here. Okay, let's go back to H4. Allow this to be visible also on daily time frame. Let's go to our daily time frame and see what is it that we're talking about. Okay, daily time frame doesn't show also what we want to see. Also, let's go to daily. Allow this on a weekly time frame. Don't know if we are going to get what we are trying to emphasize, what I'm trying to emphasize. Okay, this is not a week. I expected to see, I expected to see what? I expected to see just weeks piercing down, thinking that it's a break, but it's not break. This is last known support, okay. Going back to H4. Fact remains, this is just a fake out, guys. What is happening here? How many lines do I have here? Sorry about this. I hope I have last two. Okay, last one. Okay. This is just an attempt to break. But based off price, however, this going to the higher time frame, this appeared to be what? This appeared to be the last known support based off the higher time frame. Then the price came back in, but the price failed. After this, price failed to reach the last known high. The price failed to reach the last known low. Maybe the one that you said is the one that we say it's an attempt to break, or we file better or worse, the price failed to attempt to reach the last known low at this point. Then the price is consolidating. At this point, we are having a consolidation. We have a last known resistance at this point. Okay, let me just remove this. And we have a support at this area right here. So what we are waiting, what we are looking at this point, we want price. Sorry, let me just remove this thing so that they don't disrupt me. Sorry for the waste of time. What we have at this point, we have this consolidation. So either we want price to come back and close below this support, but by closing below this support, let us take note that this area right here that we are disregarding, or the one that we are regarding as a fake out, this area might repeat itself if the price come and break and when go up. Then we are if we go for sellers, we want price to break below and also break below this, because this is a very strong support at this point. We might put another level here. This is this very strong support based off what? Based off the higher time frame. But what we are looking for, we want price to come just up and close above this area so that we can get our what we call it, we can get our buys at this point. But we wait. Remember, we can also trade this consolidation only if we have enough zone. Now I'm talking to the day traders and scalpers. What is it that we're going to look at? So at this point, for our long-term buy, we will say we will just say buy above here. And we'll also say sell below this area. Not this, but this. There's something that I also want to do. I want to cut where I've marked the price, so that the new candle, so that I would know next time, I would know where was I when I was saying what I'm saying, and where am I going. I'll just come back and cut, so that I would know where was I and what made me say what I said based off my analysis. Then okay, moving forward, we can also check H1 and see what we have right here. We are still consolidating here. We are still consolidating. We have those fake breaks. Those were just wicks. What I meant by this price being a fake out, I meant something like this. Let's go to H4 and see, this is just a fake out. It's just a wick. But you might think that this was a break. Okay? But looking to the left, this is just a test right here. Based off 1 hour, our resistance will be here at this point. So there's nothing. This is what I meant. Okay, this is what I meant by saying we can buy within the consolidation area, based if you are a day trader, not for swing traders. It's not advisable. Only if you are a day trader or a scalper. Because let's see what is happening here. We have a clean traffic to the left. Then we have after this support, then we have a signal to buy. This was a nice buy. After the candle break, this was a nice buy. if you entered based off 1 hour, you could have saved around 30 pips. Your stop loss being 25 pips, 1 is to 1,2, 1,1, whatever it is. But this was a good trade based off each one. Then this is what we have, and I would like to make a note here. This is what we have at this point. Long-term buyers, we want price to break above this, and so that we can go up. But you can come with price as you are waiting for it to break here. You can just come with price to break above. But if you want to enter based off this area right here, you are too late. If you want to enter based off this area, you are too late, because you were supposed to enter after the break. However, after the break, 2022 pip stop loss, then to gain at least 1:5, 1:5. This was a decent trade. But if you enter here, you are too late. Why are you too late? This might be an overbought market, because it might pull back to some certain area, go back up, or it might do a further retrace to test this area at this point. So you cannot enter with a stop loss, 50 pip stop loss, 54 pip stop loss. It's not advisable that way, unless if you are a swing trader. But even if you are a swing trader, it is not advisable to enter based off this, but you entered here. It is also not advisable. The train has just left. Just call this a missed trade and learn from it, how you could have entered based off this. So now that we have this note, I will go to the lower time frame. Now that I know what is happening here, I'll go to the lower time frame, which is where I will enter the trade. From 1 hour, this is the daily entry and exit, guys. Please focus. This is the daily entry and exit, where I enter and exit the trades on a daily basis. All of this gives me the idea of where the market will go. If I get an entry here and my stop loss, I find that my stop loss is here, I know that I'm catching a bigger move here. I know I'm taking this for a ride. This is around 1,200 pips. I know this is a bigger ride. But I'm not going to enter based off this. This is just telling me where might the price go. Then this is where I do my daily activity. I will enter while waiting for price to go wherever the price is going. I will also enter based off this. But once the price, like where we are at this point, let me emphasize this. Where we are at this point, this entry is worth it. If you were risking 1%, this trade at this point, if you can find an entry, this trade at this point worth 2% risk of what you used to risk. Because this is the test of what? This is the test of a weekly time frame. Come on. This worth it. This worth 2% if you were risking 1%. This trade right here, worth it. This is the kind of trade that will grow your account. Unlike having to take a trade here. This is that kind of trade that will grow your account. So when you see the move, when the move is right here, and when you see this move, this is where this trade will worth 2% or maybe 3%, depending on your risk management and your psychology around money, around losing money. But this worth it. This will make you your weekly earnings, weekly returns. This is where you compound your account. Okay, with that being said, let's go to our normal entry chart. I see that this move left us already. Then what we'll do at this point, we have the last known support here based off 1 hour. We have a last known support around the last known point 1777, around this point we have the last known support. Then this is our main resistance where the price will push. Okay, but the price managed to break through this point. It reacted, although price reacted, you see, because based off this candle was the reaction of this, was there also this week was also the reaction of this right here, also the reaction of that, but price managed to break through this level. That's a good thing, right? Price managed to break through this level. Let me mark this my concern zones with gold. These are my golden areas. What will price do at this point? I know that I said we are late here. We will wait again for another reaction to happen here. We are going to wait for another reaction to happen here. There are two things that we are going to do at this point. What is it? If price comes here and react at this point, let me just push because, okay, act as a resistance right here. We wait for the reaction at this point. Price might form a resistance and break the resistance, come back down. So we are not going to leave this move. Let's see if it's worth it. Yes, 40 pips. We are not going to leave this range. Right? And one other thing is that price will react at this point. This is what we call buying at the resistance. This is what I know. I said, if you are entering based off this, you are too late. This right here, if you're going to enter here, enter a buy here, you will enter based off what you're going to get here, not here. Your stop loss being put somewhere around here. This is what we call buying at the resistance. So with that being said, we are going to wait for reaction to happen. What kind of a reaction? This faked us out. And beware, this is what might happen. This can happen at this point. We are saying that we are waiting for reaction at this point. We might have these two candles rejecting this area right here after. And this is exactly what happened in two ways. There are two scenarios for this. This happened, the price reached the level, which is this. After reaching the level, these two rejection candles happened. Price first rejected, and price broke, which this is our entry candle. If we are using an impulse entry, this is our entry candle. We would enter, maybe put our stop loss somewhere above the previous candle, aiming to catch the support here. But what happened? Price only went down a little bit, then after did what? Broke above and went up. Or what happened again? This might happen. We are waiting for one or two. We want price to reject, and finally break above, and we catch our buys. So we want ourselves, but beware, this is a buying market. It means at this point, we'll be going against the trend. We'll be selling a counter trend. Come on. We must be aware of that. So we are waiting for this thing to happen at this point so that we can catch ourselves. Just the small cells, we can catch maybe 20 pips, 30 pips, 10 pips, and go out while waiting for price to go up. And what is it that we are waiting for? This might just be this, might do this, price might do this, break. Then upon this break, we sell. But this sell might be just a retest for price to gain more buys and break above. So if you are taking sells at this point, you must beware. Be very careful, You must be very careful because we are on a buying market. Otherwise, let's just wait for a sign here for us to buy. More comfortable with the buys, but I'm not saying I'm going to take the sells here because I'm comfortable with them and I have experience taking sells based off that, profiting based off that. So I'm not worried about taking sells at this point. I will take sells, but I will know that my target will, even on this 40 pips, my target will be 10 pips. Then I'll go out, wait for my buys. I know that 10 pip maybe will create a kind of support right here and go back, or double bottom, then we buy double bottom, then go back up. Okay, then let's go to what are we going to say here. Here we are waiting for reaction. At this point, we are waiting. What up with my keyboard? Come on. We are waiting for reaction either to buy or sell. We're waiting for reaction either to buy or sell. How are we going to sell this market? We explained. How are we going to buy this market? We also explained. So we are just waiting for reaction after this candle. What will happen? Then let's go back. Let's go to 30-minute candle. Okay, the sells at this point, even if we saw we saw 40 pips, 40 something pips, even if we catch a reaction, even if the reaction happens here, we have like now that 40, not that 40 pips to this level, it's been reduced to a, it's been reduced to 33 pips. It's been reduced to 33 pips because you will catch maybe your buys, your sells here. You might catch your sells here. This is a small risky trade, and catch out of 17, 18 pips, catch your 10 pips and move out. This is risky. Only if you know what you are doing. Only if you know what you are doing, because based off structure, this was an uptrend and we had a structure moving up. What happened? Last known high, then the structure was broken here. Then this might be an attempt to retrace, to test the last known higher low point, then to come back down. But coming back down to catch more buyers at this point, to go back. Oh, this reaction right here might be it, but we are not going to buy based off this. We want another reaction just to break this level right here and close above so that we can catch our buys. And even if we catch our buys, what will happen? When we buy above here, we are looking at this point. Price might react at this point. Remember, now we are day traders. Price might react. Please look at my line here. Look at my horizontal line on a cursor. When price reach here, which is this level, when price reach here after 20-30 pips, you want to manage your trade. If price gave you, there are two ways that you can manage your trade. And by the way, there's more from what I say. Please look at this on a psychological level, my psychological standpoint, than looking at the analysis, because I'm saying more. Try to grasp my thinking process than the analysis, than the drawings on a chart, because the most important thing is what I see psychologically. If you can buy here, please beware that the price might come here and come back to retrace. Oh, I wanted to say there are two ways that you're going to manage your trade at this point. Either at this point, when price reach here, either you trail your stop, number one, or number two, you take something out of this trade. Meaning that if you are risking $50 on this trade, just take, maybe, let's say you are on $50, you are on $70. Just take out your $50. Take out your $50 initial. Take out 1:1 and save. It means that you've gained an extra trade, and let that $20 run. If it's $200, take out. If it's $200, you are on $200 and you were risking, maybe let's say you are risking $100. Just take out $100. Let $100 run. Because what will happen? This is what happens in most cases. What will happen? This price might retest, because might come here and after when you go back, or make a deeper retrace. It likes to do that to hit your stop loss, and after hitting your stop loss, go back to your desired direction. Then you would wonder, I lost this trade, but I was on profit. Then how do you do? How then the second part on how to manage the trade at this point, you wanna see this. If you see something like this at this point, the second way to manage your trade, to manage your trade, yes, to manage your money, to manage your risk, your stop loss maybe was somewhere here. You trail your stop loss, put your stop loss below the new found support, so that when you are kicked out of this position, you are kicked out with a certain amount, with a profit instead of a loss. There are two ways. Like I said, either you can trail your stop loss, or you can take something out of this trade. Then you trail. By trailing, it means that if you take something, let me explain again two ways why I'm saying that there are two ways, and those two ways, they have different effects based off your finance. One, if I take something out of this trade, and then let's say my target was around this at this point, and I was targeting, let's say the risk was $100, I was targeting $500. If I take $100 here, obviously when the price reached my desired level, I'm not going to make $500. I'll be making money based off what I left in the trade. Maybe it will be $200, $300, but it will be worth it than losing a trade. But if I won $500, all of it, I will do what? I will trail my stop, put it below the support. Then I know that if the price goes my way, I will do what? If the price goes my way, I will collect $500 as it is. By the way, managing risk, it's a win-win situation. If you manage risk, know that you are on a win-win situation here. You are not losing anything. Because if you don't manage risk, and when you lose, you lose. But if you manage risk, when you lose, you don't lose. You made something out of that trade. You either draw, or you either draw with the market, or you take a little out of the market. And when you win, you win. When you lose, you win. So it is very advisable, it's very important to manage risk all the time from your trades. Because I cannot emphasize this more. Managing risk, it's a win-win situation. If you manage risk, you are a king. You always win. Let's say, for an example, my trade is here, and I was risking $100. And I don't want to move my stop loss. I was risking $100, and then at this point I'm on $150. Then I take $100 out. When I take $100 out, and the price the price turn against me and hit my stop loss, where am I? I won $100. So it's a win-win situation. I just saved $100. I saved extra trade. If I was risking $100 and I was able to save $100, it means that I have saved, even if I lost, even if on my history point will say it will be red, but the most important thing is that I've gained an extra trade. Next time, if I had 20 trades to make with the money that I deposited, it means now I have 21 trades. Even if I didn't get what I desired, managing risk is king, guys. I cannot emphasize this. Okay, at this point, let me close this before people get bored. Let me close this by saying, what I'm doing. Let me close this by saying, let me make a conclusion here. Let me close this by saying, here we are going to wait for reaction. Either what kind of a reaction. I'm not going to be scared to sell based off this reaction right here. No, I'm not going to be scared of selling based off this. So the only time that I will be afraid and I will take a lot out of the trade, it's when I see price reacting at this point, because this is just a minor area right here. We are waiting for price to react and give us the signal to sell, or price to react and give us the signal to buy. This is where we are at this point. And if we buy, it's a good thing. If we get something like this, let's say maybe if we get something like this, it's a good thing because we are buying for a long term. We can even risk 2% because why are we risking 2%? Based off weekly, based off this, we are going to make a lot of money. If the buys goes our way, it means we made a lot of money based off this. So guys, I hope you enjoyed this video at this point. And if you did, please make sure that you share, make sure that you subscribe for more content. I know this is the first video, this is the first time I'm sharing my insight of analysis with you guys, but please make sure that we drag more people, we share more value, because this is value and I hope most people learned out of this. Okay guys, have a happy trading week. Please don't risk more, risk less. Know that we are here to make money, not to donate money. Risk less. The money you are going to make, you are going to be consistent. If you risk less and become consistent, you are going to make more as time goes. Okay, I'm out.